What's up, everyone? I hope all is well today. Matt Garland here, NMLS number 58700, but better known as MG the Mortgage Guy. Look, I'm coming to you guys live today on a Saturday. Beautiful day here in New York City. First and foremost, welcome all my new subscribers to the page. I appreciate the love. Make sure you share my page with your friends, your community, your co-workers, your best friend, your enemy, whoever, right? Share my page. Make sure we make MG the Mortgage Guy's YouTube page the number one source for mortgage financing and real estate on YouTube. The only way we can do that is if you guys are sharing, subscribing, and most importantly, smashing that damn like button on all of my videos. All right. Now, shout out to everybody that's joining me live today. In the comments, put where you from, man. Where you guys representing from, man. I always want to know where the subscribers are from, man. So if you're from New York, stand up, put it in the comments. DC, Cali, wherever you from, put it in the comments. All right. So today we're going to talk a little bit about mortgage interest rates. All right. Interest rates are extremely, extremely, extremely low. This is the cheapest I've seen money in my 18-year career as a professional loan officer, right? Mortgage rates are absolutely insane, right? So Freddie Mac just came out the other day, well, 2 days ago, and said the national average for mortgage rates last week was about 3.13%, which that right there was the lowest on record according to Freddie Mac, right? The lowest ever. Let me repeat that. Freddie Mac came out last week and said that the average U.S. rate for a 30-year fixed rate mortgage last week was 3.13%. The lowest on record. Yo, that is absolutely insane. Let me give you some color. The first home that I ever purchased, my interest rate was 7.25%. I'm a 41-year-old man. I'm not a 60-year-old guy, right? I wasn't purchasing real estate in the 80s and 90s. This was just 15, 16 years ago. My rate was 7.25, right? Compared, and that was a good rate, right? The next mortgage I did was at 6.25. Amazing rate. When I got myself into the fives, I thought, hallelujah, this is like the greatest thing since sliced bread. But now to see rates on a national average is 3.13% is absolutely incredible, right? This is happening, and the mortgage rates have been a bright spot in the U.S. economy since the Federal Reserve stepped in into the bond market again and started making purchases in March because of COVID-19 and quarantine. They had to pump up the economy, right? But this is just absolutely insane. I'm telling you guys right now, I'm locking people in below 3% right now, you know. So if you guys are in the market to purchase a home or refinance, most importantly, if you're looking to refinance, you need to reach out to me, reach out to your lender, reach out to somebody ASAP and take advantage because there's plenty of people, whether you have a primary residence, you have investment properties, take advantage of this cheap money. Look, I just locked someone in last week on an investment property, 3-family property, under 4% on a 30-year fix. That is absolutely insane. When this customer of mine purchased the home about a year and a half ago, we had 5.5%, and that was a great rate then. So just think about the amount of money. I think they saved like $400 or something a month on an investment property. Think about that cash flow. That's over 4,000. It's almost $5,000 a year in extra cash flow that they made by restructuring their debt. So I'm encouraging everybody here, right? Encouraging everybody right here. Please go ahead and go out there and buy you some real estate and take advantage of this cheap money, right? Take advantage of this cheap money because it won't be here for long. Like just you got to think about this, right? Just about a year and a half ago, I can't remember the exact dates and months or whatever, but I'll have to say it was sometime in 2018. Interest rates interest rates went up to like 5%, 5.25. It was absolutely insane, right? This was just 2 years ago. And then they started creeping back down into the fours and then back into the high threes, low fours. And now we're hovering that mid high twos, low threes. Guys, you need to take advantage of this, man. Don't let this opportunity pass you by. Please do not let this opportunity pass you by. Take advantage of this cheap money. This cheap money, right? This won't be around for long. This won't be around forever. This is short term. I'm telling you, I personally think come fourth quarter, and also let me preface this by saying, depending on what happens with these cases with COVID, if states start to close down again and start reenacting these stay-at-home orders, this might change in the future, right? But I personally think the rates will be low for the next 6 months, maybe 8 months tops, and then we're going to start creeping back into those threes. All right. Now, if COVID stays around and is as bad as it's been getting bad, cases are increasing, pretty much 30 plus states. If that continues to happen, then yeah, absolutely. Rates may stay low a little bit longer. And if that does, guys, take advantage of this right now. I'm trying to tell you, you need to go out here. You need to buy some homes. You need to get this done right now because money is cheap, and I don't think it's going to get any cheaper than we have right now. Yo, I just locked in a EYL University member. Shout out to my brother Morgan, right? And you guys heard me talk about this before. We're doing an FHA loan, 4-family, primary residence, over 740 credit score. I locked my guy in at 2.5% on a 30-year fix. Like, that is absolutely insane, right? Absolutely insane. So take advantage of this cheap money. It's here for you guys too. Let's get it on. Renovation mortgages, right? Renovation mortgages are still in the threes, but it's cheap money. Where just 6 months ago, renovation mortgages pre-COVID were in the mid to high fours, right? Take advantage of 203K loans. Now that they're back, most lenders are offering them again. Take advantage of these 203K loans. Take advantage of Fannie Mae home-style loans. Take advantage of these programs, these conventional FHA programs that offer rehab. If you're going to buy a property in this market, buy undervalue, buy a home that needs work. Use these programs, cheap money, and take advantage of this. This is what I'm trying to tell you guys, all right? Now, I'm looking at the comments. A lot of you are giving props to my new studio. And I see my guy, Tukes, is all in the comments. Loving it, right? So I cannot take credit for what you guys are seeing behind me because this is the new MG Workshop studio that we are in. And this is the brainchild of my guy, Tukes Productions, who's in the comments. So make sure y'all show Tukes some love because my content is about to be out of this freaking world because of my guy, Tukes, all right? Executive producer here at MG Workshops, all right? So shout out to him. I had to throw that in there because I see y'all in the comments going crazy, all right? So make sure y'all support the channel. I hope you guys like this. I'm going to take a couple quick comments. Where do you reliably find mortgage interest rates? Kenya, good question. It's extremely difficult for you as the consumer to find, what rates are. No, honestly, because all these websites online just giving you general information. The best way to do it is you got to have a loan officer on your team. You guys are in real estate, in the real estate business, right? Whether you're buying primary residence or investment properties, you're in the real estate business. You need to have a mortgage guy or mortgage girl. So that way you can have conversations with them about your particular scenarios or what you're looking to get accomplished. And now you'll know what the rates are. So you got to hire someone to work on your team, right? You got to hire someone on your team so that way you can keep up with interest rates because you as the consumer, you won't be able to keep up with it on your own. All right. And this is just all, I'm just keeping it real. It's going to be very difficult for you to get access to like the information that I have. Now, make sure all you guys like this video, all right? Because the algorithms will not push my content if you guys are not liking it, all right? So make sure you like it. If you're new to the channel, make sure you subscribe. Hit the bell for notifications. I'm going to just be jumping on lives randomly moving forward, all right? So hit them bells. You never know when I'm gonna jump on here, especially now that I got the studio. We moving out here right now. So content in the month of July and moving forward. There's going to be so much information that I'm going to be sharing with you guys, just like I did right now, about a quick market update about the mortgage rates. As of June 27th, 2020, the national average, according to Freddie Mac, is 3.13%. That is the lowest that they've had it on record of all time, right? We are in unprecedented times right now in the mortgage industry. Also, another thing, look, here's another thing, right? Here's another thing. The mortgage business, right? Lending is slated to have its best year in 14 years. They're saying that banks are going to lend $2.65 trillion worth of home loans this year. FHA, VA, conventional USDA loans, not the private money. We're not talking about asset-based hard money. We're talking about the regular traditional. 2.65 trillion with a T. There's money out here, baby. It's waiting for us. It's waiting for you. And with these dirt low cheap rates, you got to take advantage of this, right? Take advantage of the money. It's here for us all. All right. Again, my name is Matt Garland, NMLS number 58700, but I'm better known as MG the Mortgage Guy. That's all I got for you guys right now. I'll be back soon with another video. All right. Peace.